we detected an unusual trade worth $4.2 million on Nvidia stock, ticker symbol NVDA. But here's what makes this trade even more interesting. Nvidia reports earnings very soon on November 19th. And so in this video, we'll break down this unusual option activity to figure out whether this wealthy investor is going bullish and buying, expecting the stock to move higher, or bearish and selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, including potential access to earnings data before it's public, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. So to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. And this is not just theory. Our analysis has already delivered proven results even on Nvidia stock itself. For example, if you've been following our work, you know that we caught the bottom here, right at its 52-week low, with perfect timing. Here's the video we posted back when Nvidia stock was trading under $100 per share. If you missed it, we'll link this video up here so you can see exactly how we did this using our own deep research-based approach with data-driven analysis. And now that Nvidia has climbed much higher, let's take a look at the latest data to see if another opportunity is setting up. As we can see here on the options time and sales tape, there was unusual option activity on November 14th at 11:02 a.m. at the 47-second mark in these December 5 options at the 220 strike calls and the 205 strike calls. A quantity of 18,499 contracts were being traded at the listed option prices, so we can calculate how much this investor spent. Since this trade was executed as a vertical call spread, we'll first need to calculate the net cost per contract. So, for the 205 strike calls, the option price is $3.76. Keep in mind that options are priced per share, and each options contract controls 100 shares of stock. So to get the actual dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each of these contracts cost $376. Next, we subtract the premium received by selling the 220 strike calls, which was $146, giving us a net cost of $230 per contract. And so when we multiply this by the total number of contracts traded, 18,499, we get a total trade cost of approximately $4.2 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to those lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. And if you join the membership through our website instead of YouTube, you'll also receive additional trade alerts by email because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website. Keep in mind that our members also get early access to trades like this before anyone else, even before we share them with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website, where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As we can see here on the option chain, for the December 5 options, we also bought these 205 strike calls and entered the same position here, marked as POS, with the green color indicating a buy position. And at the 220 strike calls, the red color shows a sell position because we sold these to open the same trade, a vertical call spread. Now, how did we know these were new opening trades? Well, notice how the volume of contracts is higher than the existing open contracts in the open interest. This tells us these were new contracts being opened, not old ones being closed, because it would not be possible to close out more contracts than the number that were opened to begin with. This data is very important to confirm because it strengthens our analysis, and that in turn increases our probability of profit. Because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock since they're getting out of the trade. And in that case, it might not be the right time for us to jump in. On the other hand, if a wealthy investor is opening contracts, like in this case, it could signal an opportunity for us to start a new trade. This is why we always take the extra steps to verify the data at a deeper level. Many other websites and scanners simply flag every high volume options trade as unusual without filtering out closing trades. That's what leads to false signals, wrong conclusions, and unnecessary losses for anyone following unusual option activity. But our deeper analysis filters out those false positives, which is why we consistently find more accurate and profitable trades than other websites. And in this case, our deeper analysis confirmed that this was not a closing trade. Instead, a wealthy investor opened a new trade using these contracts. Now, keep in mind, some of these new contracts could be other traders jumping in, including ourselves and our members. But the majority of these new contracts were opened by this wealthy investor we've been tracking, the one who bought these 205 strike calls and sold these 220 strike calls, setting up a vertical call spread at a price of $230 per contract, the same price as we saw earlier on the options time and sales tape. And so when we analyze this trade, we can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable. In other words, this trade is going long bullish on Nvidia stock with this option strategy. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break-even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $205, the stock needs to trade above $207 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, including earnings, we only took a small position in this trade. We do not invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to increase your profits. And if you missed our previous analysis on Nvidia, when we caught the bottom right at its 52-week low. We'll link that video here so you can see exactly how we did this. Take care and have a wonderful day.